Hello, my name's Chris Weston, Head of Research at IG. I've been involved in the CFD and leveraged FX market for over a decade. I've seen clients that are more successful over a short period of time, but also over a much more longer term time frame as well. They certainly have longevity in the market, and I believe there are certain characteristics and traits that they share. I certainly believe that they will be very, very stringent managers of risk. They will cut back on losing trades very, very quickly and allow profitable trades to run very aggressively. They will look at that win-loss ratio, but also the risk-reward parameters as well. I believe they'll look at continuous improvement, do more of what works and less of what doesn't work. They may do that through a trading journal. They will certainly have a patient approach towards trading. They will certainly not chase markets, and they will look for the right characteristics within a defined trading plan before they execute trades, with a risk and money management strategy attached to that as well. And I think these are the sort of characteristics which we can all build on and all share going forward. I believe that when people come on board, everyone has a lot of questions. I know certainly I did when I started trading some 16 years ago. I believe the sort of questions that everyone should be asking themselves is, firstly, what am I trying to achieve from the account? Am I trying to make $1 million overnight, which requires certainly a steady amount of luck, or something much more measured and sustainable over a period of time? But I always look to try and grow the capital in the account and manage the risks around that capital as well. I think is a really good place to start. I believe people should assess their own lifestyle, circumstance and job to assess how active they're going to be in financial markets, and that will adhere to what sort of strategies I'm going to be using and what sort of charts I'll be using, whether it's 1 minute, 5 minute daily charts or weekly charts. And of course that's very personal to the individual as well. I believe everyone should treat trading like a business. You know, the metaphor I like to use is I wouldn't open a restaurant in a busy restaurant scene or a busy restaurant street unless I had a competitive edge over the market. What is it that will keep people coming back time and time again? What it gives me a positive expectancy over the market and sustainability. I want to know my costs. I want to know how to manage risk. I want to know the goals, and I want to know the competition as well. And I think this is exactly the same way that we should try and treat trading as well, and the account with IG. Certainly having a very strong understanding of the product goes without saying. I want to understand what leverage is. I'm not worried necessarily about owning the own business, but I understand that contract for difference effectively is just simply an agreement to exchange the difference between the opening and closing price of an asset, regardless of the direction, whether I'm speculating that market is going up or down. I'm just looking to make an over-the-counter agreement with the broker IG to swap the difference between the opening and closing price. CFDs therefore allow me to have leverage in the market. I do not place the full face value of an asset down. I am playing a percentage of that, and that leverage obviously carries risks as well. When I buy a contract for difference, or when the client buys a contract for difference, they're just making an agreement with the broker IG to swap the difference there as well. You never own the asset, you are merely speculating on an outcome which will be cash settled. We don't care about owning the business. We do not want to take part in an AGM. We do not want to be a shareholder of the business. We are merely speculating on the outcome of a direction. And I think from that perspective, CFDs are great because they give you the flexibility to come forward. So when a client buys a CFD, IG effectively sells the CFD to the client. IG in the background will manage the risk of that exposure. We'll either internalise the flow, we will match a client's position with another client's position, or we'll actually go straight into the market to hedge that position. It's in our interest for clients to make money. We want clients to be successful, so they carry on trading over the course of time, because IG makes their money from commissions. We make our money from spread and holding the position overnight in terms of interest payments. So we want clients to win. But effectively, we are in a position where if a client buys, we are selling as well. And I think that's very, very important for people to understand just what's involved. If a client's placing $200 down as deposit, they're effectively getting a $4,000 exposure. This is what's called leverage. Now, this is very, very important because there are natural risks attached to that. Leverage allows you to profit and loss, but it magnifies those profits and losses because I am placing a small amount of money to get a larger position. So we need to understand how to control that risk, how to actually adhere to those risks going forward as well. And I think therefore it's very important to understand your account, understand the funds in your account. It's important to know that the funds on your account plus any profits or losses, if they become below the margin that you place or that deposit for that trade, you can go into a margin call, and that's a definitive risk concern that we all need to have. The margin call means that you will need to make the capital shortfall up or potentially be closed out of that position automatically as well. So have a firm understanding about the account, the funds in there as well, how much money it takes to create that larger position. But one of the great things about leverage is the flexibility it does give you. Leverage is a very, very powerful tool, but at the same time it can be a very risky tool as well if we don't know how to firmly use that as well. So understand the risks. Understand that volatility is a key consideration. Now, volatility for me will not just define my strategy, but it will also look at things like, how do I hold a position going into a weekend? Is there a risk that we could see gapping, i.e. the market opens up significantly lower? Of course, we can use things like guaranteed stops and stop losses around this area as well. But understand volatility, not just from a strategy point of view, but understand the risks around your account, the sort of moves that the asset can have, and of course, use that as part of your strategy going forward. So successful traders will understand risk, they'll understand volatility, they'll understand the product, they'll understand what an OTC agreement is, and they won't be concerned about owning the asset as well. But I believe all these similar traits, if we look at it in context of owning a business or running it like a business, means that anyone can be successful over a longer period of time.